Investors and traders, welcome to the channel Market Chart Pattern. In this video segment, we are going to take a look at the key US technology stocks that we have been following for quite some time. This video is for educational purposes only and it is not a financial advice. So guys, if you have been following our channel for quite some time, you will know that in the previous videos, we had been discussing a trading range or as a target range of $171 to $175 per share level for the Apple stock. The Apple has actually reached that range, in fact, the upper region of it, and that's a pretty good news. And what it has also done, but not on closing basis, is actually also try to take out the 17th of August 2022 highs. Now guys, one of the things is that for now we don't have any higher targets for Apple, and what we are doing is we are just watching the price action to give us more clues. What is also important to note is we had been talking about this symmetry in the marketplace, so that is the moves of similar price. So here we go, and then also if we just move to the left hand side, here we go again, so this much moves. And what is to be noted is that this rally has actually gone above this symmetric move and breaking the symmetry, in my opinion, which is something that we need to pay attention to. So for now, we are just going to watch the price action to give us more clues whether the stock is the momentum is pretty strong, as we had discussed before, whether it's actually going to go after the $182 per share highs, whether it's going to attempt that, and what is likely to happen, we have to wait and watch and see. Let's move on to Microsoft. So for the Microsoft, we had a target of $320 per share level in a zone between $316 to $320 per share level, and the stock has actually entered into that price target range, and in fact moving towards the $320 per share level, which in fact is the 38.2% Fibonacci retracement. So I'm just going to move this line to here so that's visually easily recognizable. So this is what we are watching in the Microsoft stock as well. It's pretty much in the target range that we were actually watching for in this stock. Let's take a look at Amazon. So the Amazon stock had been one of those stocks which was a little bit difficult to follow for us because it had a ABCD formation, and after that a pretty strong resistance from here and a gap down, and we were initially looking for about $102 per share level to hold. That did not. In fact, it went down to about $87 per share, which is the 78.6% Fibonacci retracement of this entire swing high from $80 to about $113 per share. One of the things the longer term viewers will know, we anticipated that the price was actually perhaps moving in this ABCD formation, highlighted in this green dotted line formation. And one of the key things we had mentioned was that for this pattern to be in place or remain in place, the price must remain above the $96.35 level, which in fact had been the case, and we have seen the stock slowly but surely drift higher, and it's pretty much in that range. The high so far has been on Thursday, 18th of May. The high came in at $118.60, pretty close to our $120 per share level. In that ballpark figure, it's already there, so we can actually say that it's also trading in the expected trading range, or in fact it has met that price target range that we were watching for. So we have got Apple, we have got Microsoft, and we have got also Amazon in that trading target ranges, achieving those. So for the moment, we are now actually watching price action to give us further clues. We don't have any further targets for the time being in the Amazon stock. Okay, guys, so let's take a look at Tesla. So this Tesla stock here, one of the key things is um, that this stock, as long as it holds this $155 per share level, so let me actually make it Tesla 155 key level to watch. What it means is that this, let me actually also do a little bit of cleanup. As long as this $155 per share level is respected in terms of support, in fact, this A, B, C, D pattern to the upside might in fact be in play. And the key resistance level will be this $210 per share level, which the longer term viewers of the channel will know that we had pointed out in advance, and that has proved to be a solid resistance level for several months. And that's gonna be a challenge to take this level out, but as long as $155 per share level is also holding, the ABCD formation is the most likely thing to expect in terms of the price moving higher. And one of the key things is, let's see if there are any Fibonacci retracement levels which come here, and in fact it will come and meet $270 per share level is also the 78.6% Fibonacci retracement. So let me actually draw it like this way it is visually a little bit easier. Let me see if I can change the background color to something so that yep, in fact I was able to do that. So that way it's just easier to recognize. So that is the pattern formation that we are watching. As long as this point D, which is $155 per share level, is held. In fact, it's about 150 $153 $54 per share level to be precise. Also, one of the things to note is the price on a 3 consecutive daily closing basis is actually closing above the 20-day moving average, simple moving average. So that, from a momentum perspective, shorter term momentum is still positive for the stock. So this is what we are watching in the Tesla stock. Let's move to Meta. Okay, so the Meta stock has actually been a stock which has performed really well. But also something to note that the stock also went down a lot. In fact, went down to 78.6% Fibonacci retracement from the time of its IPO to the all-time highs reached around $383 per share level. So one of the things that we were really watching in the stock was this key level of around $200 per share level, which was the 38.2% Fibonacci retracement. Once the stock broke above that, that was an indication to us per our analysis that the strong actually on fundamental basis improved, and that was pretty good news for the Meta shareholders and those looking to take a position in Meta. And what in fact the stock is now doing is we had identified a zone where we have this huge gap around, and the 61.8% Fibonacci retracement comes around $270 per share level. The stock is in fact slowly grinding into this region. Whether it is able to rally another $15-20 and get up to 61.8% Fibonacci retracement remains to be seen, but the stock has had a pretty significant rally which we cannot ignore. A pullback will be a healthy thing to see in this, but the momentum is strong. You can see the 20 period moving average, the prices move above that, and in fact at one point we thought that if a retracement might take place, it might go to 38.2% Fibonacci retracement level around $184 per share level. That hasn't taken place yet, and the price keep on dragging higher. So that is what we are watching for in the Meta stock. Let's take a look at Netflix. So in Netflix, what we were looking at was this huge trading range, and we had two scenarios, in fact. So what we were thinking was perhaps this price might actually be in an ABCD corrective pattern formation and a pretty strong level of support coming around $270 per share level because of this ABCD one-to-one price projection. And also we'll have the 50% retracement around here. And what has happened is that for this to take place, we had also mentioned that this is a really key level of $310 per share level, because this was a 61.8% Fibonacci retracement of this swing, which is highlighted here, that it needs to be broken to the downside, and that did not take place. And what in fact has happened is that price has gone and targeted the upper range, and this is where the price is trading. Whether that's going to be a double top formation, that remains to be seen, because quite a lot of times the breakouts, in fact, they they do not materialize, and price after a breakout fails to move higher, so it becomes a failed breakout, and in fact it moves back into the trading range, consolidate, and then make an attempt higher to break out of it again. So this is what we are watching. Again, we are just watching this trading range in the Netflix stock, whether it's gonna be a double top formation because the resistance coming here, or whether in fact it is a sustained breakout. That remains to be seen. Key level for us now will change a little bit because the price has moved. So what we see is a bit of a gap around here, and this 38.2% Fibonacci retracement comes around the $342 per share level, so roughly we can say $341 per share. So that is going to be the first indication that, maybe the stock, in fact, this might have been a pretty strong level because of the structural resistance on the left hand side, and in fact this might be a double top of some sort, and breaking below the 38.2% Fibonacci retracement, it will be an early indication that price might actually be targeting the lower end of the range, and perhaps even move lower. So that remains to be seen. For now, we are just waiting and watching the price action, and in fact really watching carefully $341 per share level. Let's take a look at Roblox. So Roblox stock is in fact been in a long consolidation for about a year now. 10th of May 2022, that's when it formed a low, and it's just been going sideways. We were initially thinking, and we still think, that this stock might actually be in an ABCD formation to the upside, and we could see the stock trade up to about $58 to about $60, roughly speaking. But on its way to the upside to these levels, there are a number of challenges. The resistance level the stock needs to take out, and we had pointed out this zone right here around $47 per share level. That was a pretty good resistance level. Price reached there slowly but surely, but was not able to take it out. Then we have another resistance level here around coming around $53 per share level. That's the structural resistance here. One of the key things when the price in fact did move lower was that it formed this ABCD one-to-one formation right here, forming a double bottom. Price has had a good rally from a momentum perspective. Shorter term, it's also trading above the 20 period moving average, which is a shorter term positive momentum thing for the stock. But again, the challenges remain in terms of several resistance levels that the stock needs to take out before it's able to actually reach the kind of the deep point we are looking at between $58 to $60 per share level. Now the key thing for this stock is that as long as it's $33.63 level is actually not broken to the downside, we might have actually a structure where we might have another ABCD going to pretty much the same levels of around $56 per share level. So that will be the A, B, C, D one-to-one projection. But for this to happen, this is the point which is going to be the C point that remains to that should remain intact. Otherwise, this pattern would have broken. Let's actually write this down. A, B, C, and that's gonna be the D with a question mark, because at this stage we do not know whether this pattern will hold or not, whether this point C will hold or not. So guys, thank you very much for watching the video. If you found the video of good educational value, please do subscribe to the channel. If you like how we look at the markets, how we analyze using pattern recognition, Fibonacci ratios with price projections, expansions, and extensions, please do subscribe to the channel and also like the video. And if you want to be aware of when the new videos are posted, then please hit that bell icon button. That way, when the new videos are posted, the algorithm for YouTube will notify you. Otherwise, these days, because of the sheer amount of videos being produced by all the creators, fantastic videos, it's difficult to know at times. So thank you very much. Good luck and good trading.